don't know if you boys remember, but Melvin Capital took a fucking ass whooping by Main Street through the Wall Street Bet apes, my mans, from Reddit. So here we go. This is per Bloomberg and Wall Street Journal. Melvin Capital clients are down 52%, or roughly $6.8 billion since January of 2021 through this past March. Melvin Capital Management has responded by restructuring, which is hilarious. Wall Street Bet apes are crushing Melvin on their short position regarding GameStop. So Melvin Capital's response to all this shit that was going on with GameStop is to cut their assets under management from 12 billion down to 5 billion. Dave Plotkin came out and he said that they're going to continue to look for short positions. Big fucking mistake, if you ask me. Yeah, let's keep doing the activity that just ravaged half of our assets under management. Yeah, that's a bright idea, asshole. I mean, really, holy shit. That's like saying, "Oh, we have a giant hole in our boat. Let's just make a bigger hole in the fucking boat." Yeah, that'll stop it from sinking. Fucking moron. Sorry, I'm interjecting with my opinion here, but this guy's a shithead. So starting January 1st, they have plans to charge incentive fees ranging from 15 to 25%, down from initial performance fees of 20%, the industry standard 2 and 20, as we know. So down from previous performance fees of 20% to 30%, before reverting back to its original high fee structure on January 1st, 2025. So through January 2025, they're going to have lower fees from 15 to 25%, down from 20 to 30. Citadel has also come out and they clawed back $2 billion they invested in Melvin Capital. So from 2014 to 2020, Melvin averaged 30% a year after fees, which is pretty good. But in my opinion, those days are long fucking gone. So now Point72 and Citadel struck a weird revenue share with Melvin where they're entitled to 3 years of earnings, which is interesting because now they're pulling back capital. So they're still going to share in revenue, which is kind of nuts. I would think that the revenue share would be contingent upon capital, but nonetheless, these guys are sharks, and Plotkin is just a bozo, you know. So here's my question that I have for you, Robert, because I know you're very well versed in this. You were sort of one of the apes that was caught in the mess of this. Is it safe to assume that retail activist investing is here to stay, or was the GameStop short squeeze a black swan event where Main Street just ganged up on Wall Street?
Yeah, I actually, that's actually a false statement. I actually never owned AMC or GameStop and never will. I think it's massively overvalued and such. But this guy, Gabe Plotkin, you know why he returned the money, right? Because when you have a hedge fund, etc., and such like that, you have to basically make your investors whole first before getting any carry or any 2% transaction fees. So by returning the money and then starting another hedge fund, he starts from scratch and he doesn't have to make up the massive losses that he ensued in the GameStop saga. So basically, he's like saying, "Oh, I'm shutting down my hedge fund. I'm shutting down my hedge fund." But then he's basically opening up another hedge fund 30 seconds later. So he's doing it basically so that he doesn't have to make all this money back before he gets his fees. So he's just basically a scumbag and an asshole. He steals from all these people. He makes them massive losses. Then he just raises money again and starts another hedge fund and then collects his fees. He's one of the worst people in the world. He's a total fucking scumbag, total asshole. And he's going to hell.
All right, so on that same note, here's a fucking interesting conspiracy theory I have for you about Gabe Plotkin and the shitbag he is. So Plotkin, for those of you who don't know, he was a star portfolio manager for SAC Capital, which is Steve Cohen's old hedge fund that was shut down by the SEC for insider trading. Now, I might be going out on a limb by saying this, but is it entirely possible that Gabe Plotkin's Melvin Capital is being used as an arm to allegedly engage in the same activity that was conducted by SAC Capital before its shutdown? Robert, I want your thoughts on this. This is a spicy, spicy question, and I love a spicy answer here.
Well, I mean, of course he was. You know, if you look at the payment for order flow that was going on between Robinhood and Melvin Capital, you look at the connections of Stephen Cohen with Melvin Capital. Basically, they make up a large percentage of the broker dealers that basically facilitate the transactions, and they definitely 100% shut down the stock of GameStop to basically curb the buy pressure. And I don't know if I necessarily blame them, because the whole financial system as a whole probably would have collapsed. GameStop kept running up, and I think a way we could actually solve this is if we move settlement times to like a shorter period of time, and we have like the same day settlement or 1 day settlement times to lower the risk, lower the capital requirements that are needed in order to facilitate the transaction.
Yeah, right now settlement times are T+2, which is the transaction day +2. So, and then for options, it's T+1 on a buy, and then T+2 on exercise of options. So it's very interesting to see that. And I'm glad you brought up some of the market manipulation and some of the other bullshit that was going on, because Citadel is not innocent in this whole ordeal. How is Citadel, as a market maker, able to own quite a big, really a beneficiary owner stake in Robinhood? Like, what the fuck? They're clearly just jumping the pile here, and they're just like you said, with the order flow. They're seeing major buy blocks come in for any particular stock or equity in general. And then they're just buying ahead of the pile. They're buying before trades are processed. How is it? I don't even understand how that doesn't violate securities law. How can you be a market maker and then own a fucking brokerage like Robinhood? That makes no sense to me whatsoever. Fucking bananas.
There's literally like, I think there's like maybe 5 like brokers that basically facilitate the trades for Robinhood. It's like Citadel, and then it's like Wolf something Capital, Saswaka. There's like literally 5 firms. So it's not out of the like realm of reasoning that these 5 firms would just get together and talk to one another and basically have access to all these trades. Like, it's totally not out of, it's literally 5 people coming together to discuss what's going on. And Robinhood makes up a large percentage of trade activity for retail investors.